Hey guys, it's me again. By the time this video comes out, it will probably be a new year already. I think, depends, but probably be. So I hope you guys have had a great 2021. If not, it's all good. It's time to switch up the flow and make 2022 your year. All right. So I hope you guys have a great year, be it in trading or in life in general. I hope you guys have a great time. All right. I know I haven't been active at all on the gram or on Discord, to be honest with you, but that's because I've been busy with my personal life, with my finals in university and just stuff in general. So I haven't really been trading for the past month. So I haven't really been able to pump up content, So, but I'm back. I'm here. All right. That's good. That's cool. So anyway, I posted like a poll on Instagram like a few days ago asking structure or M1 entries, but basically I didn't put a question. I forgot to like actually give context, but basically the question was, what content would people want to see, structure or M1 entries, right? And thank God people chose structure, because if they chose M1 entries, bro, I would literally have to go back so many, like literally just bar replaying shit to like try and find examples and stuff like that. But I'm glad people chose structure, because first, I'm lazy, and with structure I can afford to be lazier, right? But really also because structure is a lot more important. Your M1 entries are honestly the least of your worries if you're trading this kind of method. Like, don't stress out your M1 entries. Just get your high time frame stuff down, like your structure, your POI selection down, and you're all good to go. Your M1 entries are just easy at that point, right? So, I waffled. Anyway, enough waffling, let's just get into the video. So in this video, I will be explaining briefly about structure and why it's important. But what is structure, right? You've probably heard the phrase like, structure is king, structure is key, literally from everyone, right? Doesn't matter what like strategy you use, it's literally everywhere. Now, why is that? Like, is it really that important, or is it just like BS? Well, it's important. First of all, it's really important. Like without a structure, most threads won't even make sense, and with structure, most threads make sense. And it's really good. So let's just get into the explanation. That was a really bad intro, but basically, structure essentially are just market sync points, right? So these sync points are important because we look at them and we draw them out. We can kind of see from them where price is likely to head, right? So for example, we use a concept called the weak highs, weak lows, strong highs, strong lows concept, strong structure vs weak structure, right? So what that means is that, for example, in an uptrend, we're printing higher highs and higher lows, right? In its general form, if a higher low, right, this is that higher low, broke a higher high right here to make a new higher high right here, we classify this structure as a strong low right here. And in theory, price should not break below this structure for the previous uptrend to continue. That's what it means by strong structure. So as long as a structure point has had a follow through, we call that a strong structure, right? In a downtrend, it looks something like, if we're going down, if this lower high broke this lower low to make a new lower low, then we call this a strong or a protected or a confirmed, whatever, same shit, we call this a strong lower high, and it should not be broken above, for price to continue in its downtrend. And if it does break above it, or if a strong structure gets broken, we might be able to say that's chalk, right? That's change of character, and we may be seeing price print in the opposite direction compared to the previous trend, right? And an example of weak structure looks something like this. It's kind of harder to spot like a weak structure because it's currently printing most of the time. But basically, like, all right, if price comes up here, right, this is that strong structure. This is the unconfirmed structure, right, because it hasn't done anything yet. So we come up here, shit, that's horrible. We come up here, and we start to see price failing and ranging. We can't just take trades off of this level right here. And why? Because it's unconfirmed, right? There's no saying that price will just, break it and then come lower to a confirmed structure to go higher, which is why it's important to map out your strong structures, right? Because you can kind of take trades around them as well as know where the trend is. If your prevailing trend is still in control, or if we are reversing, right? For example, if we see some sort of break of structure like this, right? Maybe like we broke structure right here. Maybe I can say like, all right, maybe price may head lower, all right. And one thing I do is I only take body closures as a break of structure. I don't take wicks, depending on the time frame. But my structure is mainly on the H4, so I only take H4 body closures as breaks of structure, right? Because with a wick, it could just be, right? Because with a wick, it could just be a liquidity sweep, right? It could just sweep LQ and then go up, right? So only body closures for me personally. Different people see things differently, but I just take body closures if that makes sense. It's a lot safer, I feel like, and more confirmed. So body closures, break structure, then yes, we may be going down in this case, right? So that's basically the concept of weak highs, weak lows, strong highs, strong lows, right? But how do you map it out exactly? Like, is there a trick in mapping out structure? Because it can get very confusing, right? So something like this is that I know some people use they count pips, like on GU maybe it's like on 4H it's like a 30 pip pullback. It's like a good pullback or something like that. A 50-minute on the M15 it has to be like a 10 pip pullback. I personally don't count pips. I know people that do count pips. I just don't do that. I basically just like my pivot points or my swing points to be really obvious, like literally just maybe on the low time frames it could be like a V-shaped recovery, but maybe something like for example like here, right? For this to be my swing point, I want it to be something like maybe an obvious wick up and then we just see price tank, right? Or I see an engulf candle swing point, right? For example here where we break structure, right? I want this to be something that looks like this, I guess, and then we see price start to kick in. Basically where momentum starts to kick in, in this theory, and it's like a really strong obvious pivot point. Because I know people, especially myself, I tried to overcomplicate structure back then, and it was very confusing. So I was told to just not overcomplicate it, just take strong and obvious pivot points that you like, and try to keep things as simple as possible. Like strong pivot points should only be very obvious and they should be taken as structure points, and that's it. And that's a tip that I still use to this day, and it really made me mapping out structure very easy, right? But that's basically how I map out structure, and that's the concept of strong high, strong low structure and stuff like that. But why is structure important? Okay, we know that confirmed structures get respected and stuff like that, but why is it important? Well, structure helps you identify the directional bias of a trend, right? If you're uptrend or downtrend. Why is that? Because you have to know whatever trade idea that you're going to take, be it or like a buy or a sell, is either counter trend or pro trend, right? If you're pro trend, you can be a lot more aggressive because you're flowing with the trend, right? You can be more aggressive with entries. You can just enter off of an M1 chart and flip. If you're counter trend though, you may want to wait for a more obvious and a solid confirmation that your play is going to play out, right? For example, uptrend, it's a bullish market, right? Demand in control, right? And that's ugly as fuck. All right, something like this, right? Demand in control, uptrend, right? Supply right here. Now, in an uptrend, supplies will give reactions, right? They always will. Oftentimes, they will But these reactions, we aren't expecting it to have like a very, big move, right? We aren't expecting supply reaction to dip us down to hell, right? Let's show this out right here, for example. We aren't expecting price to come up and then just do this, right? Because we're still in an uptrend. We're still respecting bullish structure, and any shorts really are just counter trend plays, right? So if it comes down to demand, we could be more aggressive. We could maybe wait for an M1 shock and flip and then just go. But if we were taking a sell, we have to think, does it make sense for price to react off of this supply, right? And why? Like, where is it heading? Is it going to head down here? Yeah, sure, that could happen. So what do you enter on? M1 entries? No. You wait for something more confirmed, like maybe an M15 chalk and flip, to show you that supply has taken temporary control to build liquidity to bring price lower into like a demand zone like this to go up. Because as long as structure hasn't been broken, we're still bullish. So any shorts are really just short-term plays, and we aren't looking for like reactions from this level right here to take us down to hell. That could happen, but we don't expect it to like happen as much as pro trend trades play out, right? Give me a sec. Let me drink some water. So that's why structure gives you that directional bias, and you can afford to be more aggressive pro trend compared to counter trend. You have to be more passive and wait for more confirmations, because who's to say that price won't just smash through a level? Why? Because we're in an uptrend anyway. So not only that, structure also helps you to set realistic targets, and this kind of ties up to the previous point of entries, right? It helps you with your entries and exits, basically. For example, we're coming up here, right? Cool chalk and flip, and then you do a sell, right? For example, you do a sell. Where is your target? Like, honestly, where's your target? Is it like down here? Is it like down here or something like that? No, your target is at the next demand level. So this is more for like a short-term play, right? Because price is expected to come down here, maybe, for example, anyway. You're not looking to hold the trade for too long, like a swing trade. If you're pro trend, yes, you could, essentially you could, once it comes down here, you could essentially do a trade and then target higher. Why? Because you're expecting the bullish trend to continue until we get a structural break, and stuff like that. I mean here, not here, no, here, So it would make sense for you to not set unrealistic targets, because that will kill your profits long term. Like you aren't expecting maybe price, like maybe you do a sell right here, like counter trend play, right? And then you target some sort of demand on here, and then price, price comes down, but then it really just comes down and stops you out. Because it doesn't make sense for price to go, deeper down until we break some form of structure, right? So, which is why structure helps you with your entries and your exits, right? Really important to keep this in mind, basically, But basically, yeah, that's about it theory-wise. I'm going to show you a real chart example in a bit. I did not go back in time to look at actual examples because I'm just so fucking lazy. In the future I will though, so don't worry about that. In the future I will incorporate structure into breakdowns if I do breakdown videos, but currently I'll just like take current market data to show you an example of this. Alright, so I just rewatched like the previous explanation on structure on this like current price data, and it was fucking horrible, man. So I'm just gonna re-record it again to just showcase to you what I was trying to say, because it was fucking a shit show, man. So anyway, so currently H4 strong bearish, right? I mean, look at it. so obvious you're bearish, right? So we broke structure right here. We broke structure, came up, pivot point, came back down, broke structure again, body closure, right? So, I mean, look at how clean this is. Look at how clean this structure point is. It literally sweeps liquidity, gets engulfed, shows a second sign of respect, and then dip. It literally dipped, right? I like that. You know, I don't like it to range like too long, but this is like what, like a day? It's all right, but just fairly obvious is basically what I'm trying to point out right here, right? Fairly obvious. So breaks of structure. Why is it what? Regular structure right here, breaks of structure right here, yeah. So currently we are caught in a range though, right? This has been ranging for like since November 18th, like almost like a month and a half now. So I mean, it's normal, right? And like end of year type shit, you know, low liquidity, low movement, banks are being lazy and shit. You know, it's expected, right? It repeats every year. But basically, we have been caught within this range, right? And different people would have marked out their structure so differently. But look at this range. Like, look at this. Look at how close everything is. Like, I know people. Some people they count pips, right? Like they count like maybe 15 pip pullback on the M15 to signify structure point, or 30 pip on the H4 to signify structure point. Maybe it works. I don't really know because I never tested it out. But basically, I just don't do that. I just follow the rule of not overcomplicating it and just choosing really obvious structural points. Because if you overcomplicate it, you'll be literally mapping out every point as structure, and that just fucking eats you up, mate. So don't do that, and just choose a really strong and obvious pivotal point, right? But previously we were looking at this as our pivot point, right? Look at how big it is, right? So this is the new low that I printed, right? And then this low was being broken by a wick, and like I said, I really like body closures as new lows, but it's a fairly big wick, so I had no choice but to see this as the new structural daily low, basically. Yeah, H4 as well. But basically, if you were to look at H4 structure, this is potentially your, you know, obvious high, right? And then we had a chalk right here. If you saw that as your high, we had a chalk. You know, so chalk. So currently, we may be seeing bullish structure coming to the market right now because we just had a chalk. And that's all good, you know, that's all Gucci. So chalk price took out lots of liquidity, sitting and resting above here, right? We took this out, you know, and then price came down, respected these lows right here, wicked it but respected pivot point, respected that, and then bam, supply these sell to buy wicks, right? So it's like sell to buy wicks, reaction, failure, this demand caused the failure, came back to retest, oh my god, mitigate. Retest is like retail stuff, but back down to mitigate this, went back up, you know. So basically demand is in control right here, right? Because we just saw this daily demand holding, the lows are holding, daily demand is holding, right, as a catalyst for a potential pullback, or maybe even for price to turn bullish right now. So intraday trend is confirmed bullish. High time frame, you may have to wait for this cluster of highs to get taken, which is why I drew this high as my pivot point, because I want this cluster of like series of highs to get taken out before I start to look at, you know, longs to be held long term, basically. Because currently intraday is really it's like really bullish, right? Look at this price action, right? It's really bullish without a doubt, right? Supply is not holding and demand is holding. We're bullish, right? However, if I did a buy down here, right? We see a chalk, we see supply holding. My target will probably be here, honestly speaking. It will probably be at this H4 level, because it was fairly obvious. Once this failed though, any trades I take right here would probably be taken off at the daily supply right here, because I have to choose realistic targets. We did see a chalk, we see supply fading, so bullish, demand's in control. However, until we take out the first signs of this series of confirmed lower highs, I'm still not comfortable with holding trades, for too long. So I personally would say that I would probably take off most of my profits at this daily supply, and then just look for other trading opportunities, basically, if that makes sense. So yeah, that's how you incorporate stuff like that. So chalk, flip, bam. But until we see a break of this structure, I probably wouldn't be holding trades. Longs at least until these levels right here. Only until then yes, I would target, because then it makes sense to target these levels up here, because we just saw a very this series of highs get taken, and then it makes sense for price to turn bullish right now. On the M15, if you're looking for shorts, I was looking for shorts, honestly speaking. We came into a day supply. We're following the high time frame trend, which is bearish. Came up, mitigation right here. Right, we see chalk, and then chalk right here, and we see demand fail, reaction failure, stuff like that. So shorts are definitely in play, right? Because we are continuing with the trend. But I still think that most of my trades will be taken off at maybe this level. I'm just not comfortable with flowing trades. It's something I'm still working on right now, but I think most of my volume will be off here, or maybe at this flip right here, stuff like that. Because we're currently bullish intraday, right? So it would make sense for you to not hold your trades for too long as well. Until at least, if this breaks, then yes, hold your trades down to here or here. The extreme makes sense. This demand train makes sense. But until then, here, most of your profits would probably be off the table, or maybe even here, honestly speaking. So I personally just follow the intraday trend, because I don't like holding trades for too long. But for those that are looking to hold trades for weeks or stuff like that, runners at least, then yes, definitely do look into your intentions on the H4, or your high time frame intentions, stuff like that. So yeah, I hope that makes sense to you. I don't know if it did. The first recording was shit, honestly speaking. The first recording was horrible, so I waffled too much, so I had to do a re-record. It is what it is. I'm not good at this. I suck, basically. But yeah, I hope this helps someone understand how to pair up structure with supply and demand in some form. I would definitely push out other examples if I get a chance to, so don't worry about that. But this is just a brief explanation on stuff like that. So yeah, I hope you guys have a great year, and I'll see you guys soon. Peace out.